Λοιπόν, καλημέρα, distinguished guests. Thank you for being here. We are used in facing surprises and dramatic changes over the last past years. We had an economic crisis, a pandemic, and now we have a war. Europe is facing one challenge after the other, and we really don't know what will happen next. In this fragile situation, it is very important for us to know what the European leadership is thinking and doing about today and, of course, about tomorrow. So with that thought, I would like to welcome the Executive Vice President of the European Commission, Mr. Valdis Dombrovskis. Mr. Dombrovskis.
Good afternoon.
Thank you for being here. You would be here live for this discussion in Delphi, but coronavirus visited you also. So I would like to wish you a quick recovery.
Thank you.
The floor is yours.
Good afternoon, ladies and gentlemen. First of all, I would like to thank President Tsomokos for inviting me to speak at the Delphi Economic Forum today. Well, unfortunately, as you just heard, I cannot be with you in person. When I accepted this invitation, I was going to speak about Europe's recovery from the pandemic, but unfortunately, events have overtaken us. The ancient Greeks believed that Delphi was the center of the world. But for today, for all Europeans, the center of the world lies over 1,000 kilometers northeast from Delphi in the besieged cities of Ukraine. The world was shocked about the dreadful murders that were encountered in Bucha and other areas from which Russian troops recently left. The perpetrators of these atrocities must not go unpunished. The EU has set up a joint investigation team with Ukraine to collect evidence and investigate war crimes and crimes against humanity. Our solidarity with Ukraine must be absolute. We must remain fully united as members of the European Union and equally with our global allies. If we fail to stop Russia now, the security of Europe as a whole will be put into question. I say this because if we do not do so, Russia will not stop in Ukraine. Here I would recall the 34th Delphi maxim, shun what belongs to others. It is imperative that Europeans learn the lessons of this war and defend our democracy and European values, which originated here in ancient Greece. The action we have taken so far certainly have surprised Russia. Putin did not believe that the West is still capable of acting with such speed, clarity, and decisiveness of purpose. But we must do much more. We must keep up pressure on Russia and increase it for as long as it's needed. Just this week, the EU and its partners stepped up sanctions against Russia. The European Union is firmly committed to support Ukraine on all levels: economic, political, military, and humanitarian. We are providing financial support for Ukraine's immediate needs during the war. This comes in a form of emergency macro-financial assistance program, with one more to come. We have started developing the Ukraine Solidarity Trust Fund to rebuild Ukraine. For all this, we need backing of EU member states, and here I would like to thank Greece for its support. We are doing everything we can to support refugees fleeing from Ukraine and help the EU countries to take care of them. And a timely reminder, today is a Stand Up for Ukraine pledging event. It aims to collect more funds to support internally displaced persons in Ukraine and refugees too. Of course, Europe's commitment to Ukraine comes at a cost. But I believe this is a price worth paying to defend Ukraine and also our freedom, our values, and our civilization. Even before Russia's aggression against Ukraine, it has been extremely tough couple of years. Every EU country suffered a great deal of economic and social pain throughout the pandemic. Thanks to the EU massive, unprecedented and coordinated response, we have got through the worst of the crisis. Now, Russia's invasion in Ukraine means that EU economies are again feeling a heavy shock. Yes, our economies are slowing, but we do not expect them to stall. However, the economic impact will vary widely across EU countries. Russia's unprovoked aggression has sparked a global commodity price boom. Surging oil and gas prices represent a major shock for the EU economy. Agricultural markets are severely affected too, wheat and sunflower oil, for example, raising concerns about food security in developing countries. All this will drive inflation further up and drag on economic activity. This is made worse by uncertainty and dent in confidence caused by continuing aggression. We can expect further disruptions on global supply chains, including for raw materials. In terms of trade, the EU has limited exposure to Russia. The notable exception is hydrocarbons. There will be direct fiscal costs too. The EU's economic and material support for Ukraine, assistance to the large number of refugees, and support for our economies, for example, to cope with high energy prices. The impact on the EU's financial sector is rather contained, also thanks to the reforms and policies enacted in the wake of financial crisis. The European Commission will release its spring economic forecast in mid-May, but we can say already now our economies are showing considerable resilience. In this context, I would like to congratulate Greece for its solid work on reforms over the last few years. It has brought major changes to its economy and strengthened the country's overall resilience. The COVID-19 crisis added to existing fiscal challenges, because one of the effects was to drive up debt and deficit levels everywhere in Europe, including in Greece. But Greece has pulled through this all rather well. Let me offer some facts and figures because they speak for themselves. While the socio-economic impact of the coronavirus crisis hit Greece particularly hard, the economy has regained its pre-pandemic GDP level in the third quarter of last year, and for the last year as a whole, it posted an impressive 8.3% growth. This rapid economic recovery has eased impact on the public deficit and debt. Greece is sending very strong signal by repaying its debt to the International Monetary Fund ahead of the schedule. In due course, it will make early repayments to the Greek loan facility. The Greek government responded rapidly to the COVID-19 crisis with substantial packages to protect incomes, jobs, and businesses. Positive labor market developments resumed, also thanks to the short-term work schemes like Synergasi. While the pandemic has brought extra challenges, Greece never faltered in its reform efforts. This commitment sent a strong positive signal to markets. The Greek authorities have now completed several major reforms, such as modernizing public administration, reorganizing the pensions administration, or insolvency system. I have every confidence that Greece will maintain the reform momentum across the board. Russia's war against Ukraine will be felt in Greece as well. Regarding tourism, a mainstay of Greek economy, the impact should be limited. Russia only accounts to some 2.5% of total tourist arrivals. Greece has relatively limited export links with Russia and Ukraine, but like so many countries, it depends heavily on Russia for gas and oil imports. In Greece's case, around 45% of its gas and liquid fossil fuels. The surge in gas and electricity prices is putting a heavy burden on households and businesses. But it's not all doom and gloom, far from it. Greece has a good growth prospects and an excellent roadmap for recovery. It was one of the first member states to submit its National Recovery and Resilience Plan, Greece 2.0. The plan has a strong economic footing as it's based on the growth strategy prepared by Christos. As Heraclitus said, Big results require big ambitions, and Greece has sought big. Greece will be one of the largest beneficiaries from the Recovery and Resilience Facility, more than 30 billion euros in grants and loans to underpin major investments and reforms. I was pleased to announce yesterday, as Prime Minister also said earlier today in a forum, the first RRF payment of 3.6 billion euros to Greece after it completed the first set of milestones and targets. With Greece set to transition out of enhanced surveillance this year and receive the final tranches of debt relief, the recovery plan will be your policy answer for the next few years. It will help to promote growth and create more and better jobs. It is expected to increase Greece's GDP by 3.3% by 2026, which should bring in up to 62,000 people into jobs. Ladies and gentlemen, I salute Greece's efforts for humiliating its economy. The European Commission is fully committed to supporting at every step of the way. But I must conclude on a more sober note. We are facing extreme geopolitical uncertainty. These are stormy waters. But if we remain united and keep in mind the 50s Delphi maxim, act when you know, we will navigate through this storm to the other side together. Thank you.
Mr. Dombrovskis, there is a debate here in Greece that the European sanctions against Russia actually hurt the European countries more than they hurt Putin. What is your comment on that?
If we see the impact of the sanctions both on the Russia and EU, it must be said that sanctions are actually hitting Russia hard. Its currency ruble has plummeted and recovered only thanks to very rigid capital controls and exchange controls. Basically, ruble is no longer freely convertible currency. We see the rapid downgrades of Russia's credit ratings, which just close to the default. We see impact on different sectors of the economy due to our targeted sectoral sanctions. So, all in all, we see the impact of Russia's economy and its ability to finance its war machine. Of course, we must say that 62% of our imports from Russia is hydrocarbons. So if we want to step up pressure on Russia, we must take further steps in the area of hydrocarbons. The fifth sanctions package includes coal, but certainly there is discussion ongoing also concerning oil and gas. As regards the effect of sanctions and Russia's corporate sanctions on the EU economy, clearly it's there, but it's contained. As I said, we are expecting EU economy to slow, but not to stall. And we are seeing what steps we need to take to the cushion impact of in different sectors. But one effect of this war, the global increase of energy prices, is in any case there, I would say sanctions or not. So we also need to see how we respond to this challenge of high energy prices. And also the European Commission has come forward with several concrete proposals.
Yes, but the problem is what is going to happen next. For example, Russian demand for the European countries must pay for the gas in rubles is still on the table. And the question is, what is going to happen at the end of the month? Is the EU ready for a full stop in gas supply from Russia? And could you explain what will happen to our lives if that happens?
We must be prepared for different scenarios. And indeed, in European Commission, we did assessment what happens if there is a sudden stop of Russian gas and oil imports, whether due to sanctions or Russia's counter-sanctions or for whatever reason. And the assessment is that not without problems, but we can deal with this situation. And already now we are working full speed to diversify our energy supplies, working with other suppliers, and our Repower EU communication also outlined how we can reduce our dependency from Russian gas by two-thirds already by the end of this year. As regards this complete question of Russia's demand to pay for gas contracts in rubles, well, it has clearly been rejected. There was a clear statement of the G7. Contracts have been concluded in euros or dollars. So these kind of Russia's unilateral demands amount to the breach of contract, and we should not be giving in to that kind of blackmail.
Prime Minister Mitsotakis underlined the need for common European measures to face inflation, and of course, energy costs. Do you agree on that? Because there is a feeling that Europe is losing time again.
Indeed, we need to once again respond in a coordinated and ambitious way. We are looking, as I said, on the solutions concerning the high energy prices, including possibility for joint energy procurement, so to say, to strengthen our purchasing and bargaining power vis-à-vis suppliers, obligations to provide a certain level of gas storages, so to fill gas storages to a certain level to avoid possible manipulations as we were seeing during this winter. We have outlined immediate steps which member states can take to cushion the impacts of gas and energy prices on consumers and businesses. We will be coming with proposals on the functioning of EU energy market, among other things, looking on the question of the link between gas prices and electricity prices, something Prime Minister Mitsotakis mentioned earlier during his intervention here in Delphi Forum. And we are looking what European resources, financial resources are there, and the first line of defense is 230 billion euros of unused RRF loans, which could be used both to address and support the countries which are now facing large inflows of refugees, and also to address our energy transition challenges.
Mr. Vice President, in the new reality that we're actually facing with Russian aggression and NATO needs, Greece is asking that countries' military spending should be excluded from public debt calculation. Your comment on that?
It's clear that as a response to Russia's aggression, there is a need to step up defense spending. And we should be seeing how it can be accommodated by EU fiscal rules, what flexibility can be provided there. This topic is very much on our agenda, and it's going to be part of the discussions when we are discussing the review of the Stability and Growth Pact and review of the EU's fiscal and macroeconomic governance framework.
So it is an issue that is open on the table now.
Indeed, as I said, it's clear that we need to step up defense spending. Current situation is just requiring this, so we need to see how it can be dealt with on a fiscal side.
Now, as we close, you mentioned that the 14th evaluation of Greek economy is well on its way. The question is, what is still left to be done, and where do you see delays, if you see delays?
All in all, we see that things are on track. Of course, it's important to keep a good reform momentum concerning the specific commitments, like, for example, financial sector commitments, primary healthcare reform, also to finalize and via property tax reform. so that we can have a positive assessment, means the upcoming report, because it's important both for Greece to receive the final tranches of debt relief measures, but also for Greece to be able to exit enhanced surveillance already in August of this year.
Mr. Vice President, thank you very much. I wish you again a quick recovery, and maybe next year you will be here with us.
Thank you. Looking forward.
Thank you very much.